Obviously, a lot of noise in the market overnight after China announced record liquidity injections and Spain revealing its cost-cutting budget. For more on all the moves, Larry Shover, Chief Investment Officer at SFG Alternatives, joins us now from Chicago. Good to see you there, Larry. Well, China, let's start there. Equities climbed globally, although Asia is certainly outperforming Europe or the US. China embarking on a week-long holiday as of the end of today. Did the announcement from the PBOC come at a good time, do you think?
Yeah, it really caught a lot of people by surprise, the rally that we woke up to this morning with 2.5% in the Shanghai Composite Index. And people still think the news coming from China is very vague. There's a lot of chatter. There's a lot of speculation. But again, the whole world is in an easing mode. So again, people think that, well, China's going to do something internally to help prop up the market and help expand their economic woes that they're seeing right now. So that was something that really propped our market up, not to mention Spain, but it did start with China.
And the rally that we're seeing currently in Europe, what's underpinning that?
Yeah, well, the rally we're seeing in Europe, I think a lot of it is just speculation. Some of it is that people, when you try to reconcile the world or reconcile Europe, I think the big question people are asking is that are they at the beginning or at the very end, and people are trading accordingly. The fact is, I think they're at the very beginning of recovery, and so there's a long way to go. So I think we're going to be full of a lot of chatter, a lot of speculation, a lot of who knows what, who's going to ask for help, what happens when they do. And at least from an American point of view, that's what the markets are thinking right now.
Hi, Larry. It's George Lucas here. I was just wondering, are you expecting more stimulus from the Chinese, especially after they announce, go through the Congress, which I think is either this week or later on in the month?
Yeah, I personally am expecting more stimulus and internal stimulus. And I think when you look at industrial metal prices, or if you look at something like copper, obviously, that's holding up quite well compared to everything else, it's kind of pointing to that they're going to do something to prop up their economy, given just the dire straits that they're in right now. And, George, this might not be exactly pertaining to your question, but I think at least from the Americans, what they're thinking, that's the whole reason why people are getting their heads around the fact that the Aussie dollar is trading as high as it is. One of the reasons. It's like we think it should be trading closer to parity. Why isn't it? And I think it's all due to the fact that people are just expecting China to do something really big.
So kind of on that theme then, because the risk is also that the ECB will then come out and do something big now, especially that Spain's austerity measures are pretty much in line with what the EU wanted. Isn't the world sitting kind of at a risk that on the other side, that rather than something collapsing in Europe, that we're going to see a lot of stimulus coming out of Europe, we're going to see stimulus out of China, and we're going to see Japan maybe even add more stimulus to try and affect their currency?
Yeah, and don't forget the Americans, we can still do it too. There could be a QE4 or QE5, who knows? Central banks are dead set on creating or inflating their way out of this issue. And I've learned the hard way that not giving enough credit to a tailwind that this can provide, at least in the short term, is really foolhardy. You can see what happens to our equity markets. All of our numbers in the U.S. are pointing to the fact that we're contracting right now. It started with the PMIs last week, ended up with GDP today. It's terrible, but we're just underestimating the effect of tailwinds. And to your point, everybody is in this mode of just dropping rates, expanding the money supply, et cetera. It's just who hits the bottom first. I look at America as a piece of driftwood and maybe Europe as a piece of granite. Maybe they'll hit first and ease the fastest and the furthest. But for right now, I've learned the hard way that underestimating the tailwind that central banks can provide is foolhardy at best.
And Larry, we saw comments out of Fitch Ratings overnight suggesting that the US fiscal cliff represents the single biggest near-term threat to the global economic recovery. What's your take here?
Well, my take is different than what the market's implying, but I think the market, the way it's acting, is implying that it's not going to be a fiscal cliff. It's going to be more of a fiscal hill, where they're going to be able to take the ball and punt it down to somebody else to deal with, and there's all kinds of measures in place to keep the thing from becoming a disaster. If the market didn't have that confidence underneath it, I don't think the S&Ps would be trading at 1450 right now. They'd be trading much lower. But given the way Americans do things and the way the American politics operate, it's just going to be prolonged down the highway until somebody else has to deal with it, but not right now in an election year.
Larry, if Obama wins the election, it's really the same government kind of like dynamics with a lame duck president in the US. So will that make it more difficult to solve the issues around the fiscal cliff?
Yeah, I think it will make it a lot more difficult, but it'll make it a lot easier for them to continue to kick the ball down the road or swing the ball down the road, whatever you want to say. And I do believe the market's pricing in the fact that Obama's going to win and the same thing's going to be in place. And so, in effect, he'll be a 4-year lame duck with nothing happening. So I think the biggest risk to the market right now is gridlock, 4 years of gridlock. So it will make it harder, but on the other hand, it'll make them easier to grease the skid, to make things smoother, kicking them down the road for somebody else to have to deal with them.
And so, Larry, do you know when Congress has to come up with their final plan? Is it end of November or end of December before they need to make a decision on the fiscal cliff?
Yeah, they have to make a decision at the end of December, right around Christmas time. So we're going to see a lot of chatter about that. But the funny thing is, nobody cares. It's on the back page of the newspaper. I mean, all eyes right now are on Europe. Nobody cares about our poor economic growth or about the earnings warnings that we're getting. Nobody cares about the fiscal cliff. It's really, really stunning to think. All eyes right now are on Europe.
And Larry, just finally, I mean, as you mentioned, we are heading into earnings season. Do you expect that to become, obviously, that's going to become more of a driver of markets over there when that gets underway?
Yeah, I mean, at some point it will have to change, and all the television stations and all the talking heads will talk about it. But right now, all eyes are focused on what all eyes are focused on. And with all the clutter, all the chatter, all the speculation, all the stuff that's floating around, it seems like everybody's focused on one issue. But you're right, at some point, that's going to have to shift. And until the broad narrative changes, I would just stay the course.